You're watching today's video technical update presented by FXTimes. It is Tuesday, May 25th, 2010. I'm Fan Yang, your technical analyst, and I'll go over some developments in the Forex markets. Today, I'll start by looking at the pound-dollar pair, which remains in a sideways channel, so get ready for a breakout. The dollar-Swiss franc is one of the hottest currency pairs right now, but is at overbought areas. I'll also look at the Aussie dollar, the pound yen, and if I have time, the dollar-Canadian dollar pair in this risk-adverse environment. This video is being produced at about 2:30 p.m. Eastern Time ahead of today's U.S. session close. Here's a daily chart of the pound-dollar pair, and this was a swing projection. After this high here, created a negative reversal. So the pair is in a bearish mode. You see in the moving averages, but also you could see that in the RSI as it continues to be below 60. So it's in the bearish range in the RSI. At the moment, it's sort of in a consolidation area, and the RSI is also near the oversold area. So there we might be able to expect some exhaustion move or another swing towards 1.38. So you see here, the low here is 1.35. The upper bound of this support is about around 1.38. Okay. Now looking at the 4-hour time frame to get a closer look at this consolidation. So now we know that the pair does have a bearish bias. So even when we look at this sideways channel, we should have a bearish bias on it too. The market is we could have several count here, A, B, C, and we may be done with this consolidation, or we may be starting another round of consolidation to end the week. So this could stay in this channel, but if it breaks above 1.45, it is likely to head towards this previous low here around 1.4750 near the 61.8% area. If it breaks below, looking at the daily, we are confirming this outlook, and a break below targets 1.39, 1.38. Okay, so that's the pound dollar. Here's a look at the dollar Swiss franc weekly, and you see this pair has been rallying very sharply. And this came after, if you remember, I guess a couple months ago, we were testing 1.05 here, and this was an important test. After the market rallied from this, we had a swing projection. It actually exceeded our conservative and even aggressive swing projections. And if you take these combined two moves, it's even broken above that projection. So this pair is very strong, and it is now coming up against some resistance area here, 78.6% at the 1.1760 area. Okay, and you see the market's already rejecting this rally this week. So you see the market slowing down, accelerated, and now it's decelerating. So that's what you see in the weekly. The RSI is about to enter into overbought zone. If you compare it to this previous high, it's already passing that. So a lot of momentum, although price hasn't reached this previous high yet. We may see some resistance at the 1.1760 area. Okay, now looking at the daily, which is extremely overbought, and the RSI here all the way up to about 83 area level, and you see this push. The daily here, you see a rejection, a dragonfly, or basically a doji, where it opened and about to close at the same price level with a tail above. So that's a somewhat of bearish signal. In the 4-hour time frame, we see this more clearly. We see this consolidation. We see the market break through that, but very, very laboriously. And then the market came down here. We have a divergence, but the market is very strong. So be careful trying to pick a top. At the moment, we may see some correction. But ultimately, the market is too hot right now. The dollar Swiss franc is too hot right now to plan for any bearish outlook. Here is a possible support if the current correction extends. So 1.1240 area is the 38.2% retracement of this swing. So look for bottoming if that market comes here. And also in the RSI, you should see the market supported above 40 in this bullish range. Okay, so that's the dollar Swiss franc. Anticipate another rally after some after correction towards 1.1760, and then there should be some major resistance level. So look for topping action very soon as well. Following up with the Aussie dollar pair, we saw the pair break below this point 86.87 low last week. This week the market is struggling with this 200 moving average as well as the 38.2% retracement. The next target is at the 0.78 area, which is 50% retracement and the pattern breakout projection. Although there's some support at the moment, the momentum is very bearish, so I have a more bearish bias during this consolidation. And we're going to take a look at the 1 hour time frame, jump all the way down to the 1 hour time frame. Okay, so this is the indecision of this week so far. You see a flag pattern, the market broke below that, and now giving us a throwback. What could happen is that this throwback could continue rallying to the 0.8250 area, and this is the 61.8%, and there's a lot of resistance residing in this area here. You have your 50 moving average, and this previous support now turned into resistance, or it will be tested as resistance. If this breaks, then we may see the market continue and test this 200 moving average in the 1 hour time frame, and possibly our previously broken support zone. At the moment, look for topping action here at 0.8250 in the Asian session. Also, your RSI looks like it would be creating a negative reversal if the market tops off before reaching this 0.8360 area. Okay, then you would have this projection, and this projection in the near term goes to the 0.7950 area. Okay, here's a look at the dollar Canadian dollar pair in the weekly time frame, and this was yesterday's projection as the market looked like it was topping in the lower time frames, but today the market continued to rally in the lower time frame, and we may have to invalidate this projection as such. But it's still not completely invalid, as we may still develop this negative reversal even if the market continues a little higher and tests the 200 moving average. Okay, so I mean at the moment it's really we need to look at the lower time frames, and here we look at the 4 hour time frame, and we do find that in the short term we may be forming a top as we have a bearish divergence here. Yeah, yesterday we saw this as a possible topping action, especially after this little pullback, but then here's another, we have another rally here that invalidated this as the topping action. But now we have a bearish divergence. However, how the scale of this pullback of this reversal is questionable, and in the short term we can anticipate it to go down to around 1.0450, which is this previous high here and this consolidation area. So that's one scenario. Another scenario is this 38.2% area might hold, as this is also the previous low here, and then the market can continue rallying until it tests the 1.11 area, which is this 200 moving average and also this previous high here. So 1.10 and 1.11 area is an important top. It's better to wait to see if the market can stretch to that area to form the top. But at the moment, we may be forming a top, but we need more confirmation. For example, a break below the 61.8% area. Okay, that should bring this RSI to test the 40. And if it breaks below, it should also break below 40, which in this case should also be breaking, of course, the 50 moving average. Doesn't necessarily have to break the 200 moving average yet. If it breaks it, that would be possibly a final confirmation for a reversal, and if there's a reversal, it may be heading back down to the parity level or even lower. Okay, so juggling with those two scenarios as the market approaches an important resistance area. The bearish one being another test of parity, the bullish one being actually, if it breaks 1.11, the next level is this power line here at 1.17. I actually don't have time to go over the pound yen, so I'm going to post it on FXTimes.com as an article. And that wraps it up for today. Visit FXTimes.com for more analysis updates and live events. Once again, I'm Fan Yang, your technical analyst here at FX Times, wishing you good trading.